Don't do it, guys. Don't place trades based on what you see here. Please consult your own financial advisors and do your own due diligence. All right, with that said, let's go. It is September 1st, no longer August, and it is Saturday, which means the markets are closed, and you can see this wonderful, enormous Ethereum price fluctuation over here contributing $1.09 to my total portfolio value, which ended at 33,631 and 27 cents at the current moment. Today, what I want to do is I want to talk about one of my favorite companies to trade ever. It's called EXK, Endeavour Silver. And to do that better, I should probably switch to a window mode. Actually, we'll do this for a while. I'm not going to be doing any drawing. So I'm going to take you through why I like this company and why I'm trading it. Now, I'm not a professional analyst or anything like that, so take everything I say with a huge grain of salt, but this is what I do and how I arrive at conclusions. So if you're interested, you can follow me along. Haven't lost a trade on EXK yet. I have some outgoing options on it, so we'll see if that still is the case in the future. What I've pulled up here is some quick statistics on the company. One thing I really like about this company is that they have very low debt. They don't have any debt at the moment. I'm looking at this blue line right now. So this is debt to equity. And they had some debt in 2002 when they were getting started, a little bit here in 2010, and overall it's been really low, and now they're debt free. You can see the revenue per share here. They started mining here in 2005. You can see how it's been increasing. Obviously, silver peaked out at 2011, but they continued growing, thinking that silver is going to catch back up in price. They made a really big push in 2013, and you're going to see how that played out when I pull in the next graph. And then 2013, I think they kind of learned their lesson a little bit, and they've been a lot more fiscally conservative ever since then. And here's the net cash per share. As you can see how after 2011 they had this cash infusion, so they're like, oh, let's blow this on additional revenue. Let's just mine a ton of silver, and look what that did, right? You can see how this cash translated in additional revenue, but it drove the price of silver down. So they had to become more conservative here in 2014, and you can see how the revenue dropped, but they still had to pay for expenses and whatnot. So they've been getting more and more conservative. They paid off all their debt 2016, and now they're cruising. And here we can look at their Q2 financial statement. All right, let me switch. So what am I looking at here? The few things that I look at is this number here, total current assets. This number here, which is the total assets, and the total liabilities, really. All right, so these three numbers, and you can see how assets minus liabilities equal roughly like 150 million. These are millions here, in thousands actually. So 177 million, 31 million, roughly 150 million worth of assets. The market cap of the company right now is like 250 million. So it's priced a little bit above its asset value, which is normal. What else do I look at? I look at these numbers right here. Net earnings. All right, let me show you better. Hello. Thank you. Okay, net earnings. Boom. Um, Now they've been losing about, you know, 6 months ended, so 3 months ended. So, they're losing a few million per quarter, but they have a lot of cash. They have like 60 million worth of cash, and I'm pretty confident in the management team there. So they've been doing a really good job. If silver prices stay low for another 2 years, this company will survive. Like there's no doubt in my mind. They've gotten so good at scaling up and down their production depending on the price of silver that and they usually always get high prices for their silver sold. They get really good deals. Like they know when to sell well. And that little pop in silver price bought them a lot of time in 2000, early 2016. So here's some other numbers here. Um, they're losing a little bit. Their diluted EPS, earnings per share, is 4 cents. It's normal. Like well, actually, there aren't many silver miners anymore because they went out of business and switched to gold because gold hasn't been dropping that much. Silver has been just brutalized. Um, they have a lot of cash. Well, that's kind of not what the earnings report showed, but maybe this is more updated. But it doesn't matter. Either way, they have the cash to last. They're only burning through about 5 million a quarter or something like that. And I'm pretty confident in their ability to manage that. So it's not going to go broke in the next 2 years. They have good management. They've learned from their lesson here. Like they tried to blow out this cash in 2013, so it wasn't working. Slowed down, fired some middle management. I even remember when this happened too. And so now they know. Now they're smarter. And you can see that even reflected in the price of EXK. You can see how here in the metal started drop 2011, but over here in 2013, 14, they try to grow bigger and it just infused a lot of cash. And because you know I think their market cap was like 1 billion in here because they just put through so much silver. But then eventually the prices caught up with them, and this is when they learned their lesson and decided, hey man, we got to be a lot more responsible with our mining here. I remember there was even a period here that when they were holding silver, they didn't even want to sell it because they were waiting for better prices that never came. So that's why this huge loss here from $6 to $2 in a matter of a few months. It happened. It was real. But that's what happens, Price doesn't always work with you, and sometimes when you're making a play, it goes the other way. But they're able to salvage the company, and they're doing all right now. They're doing the responsible things. So I'm looking to accumulate the company again, and I'm hoping that it drops a little bit under $2. I'd be happy to buy it at like 190 at the moment, but September 1st, 2018. But I still, I'm still have some. So this is the price. This is their financial reports here. Then we talked a little bit about the price, the financials. Um, we looked at, we talked about lesson learns, their management, how smart they are, good trading. So pretty much, I'm pretty confident in this company, and I can trade it, and I feel pretty good about investing in it. One thing that's interesting to note about this company, since it's losing a few million per quarter here, that means that they're really high cost producer. Okay, they're a high cost producer, and this is really good if you expect a pop in the price of silver. It's not good if you want them to be profitable and just for the moment and be steady, but it's really good if um, the price of silver pops because here's why. Here's why. Let me explain this. So let's say that you it costs you to produce silver for $10. All right. and the price of silver is $11. Okay, this is cost price. Now, let's say that that's a high cost producer, right? $10. So that means the stock is priced for a $1, profit for every silver ounce mined. Okay, for every silver mined. Now, let's say you have a, $5 producer and the price is $11, right? That means the stock is priced now for $6. All right, profit per ounce. But what happens if this price goes to 12, right? Let's say the price is all of a sudden $12. Now this producer here, okay, all of a sudden their profits double, an increase of 100%, an increase of 100%, yeah? Now look at this. If these guys go from 6 to 7, all right, that's only $1 more. That's only $1 more than their current profit, okay? So that's like a what? I can't even do the math. 13%, I don't know. It's a little bit less than 20% increase. So this stock might pop a lot higher than this stock right here. Okay, so EXK is this one here. It's a high cost producer. All right. So I'm expecting them, if there's a big um, price move on silver on the upside, then these guys are going to profit the most. And it's not that unreasonable to think that. I mean, let's take a look at SOV real quick. All right. The price has been a lot higher in 2017, 2000, I'm sorry, 2007, 2008. It's been a lot higher than what it is right now. I mean, not to mention this peak here at almost $50 in 2011. But look, it's been trending pretty much sideways for the last like 10, 10 year, well, 8 years. And what's significant is this little pop here that we got in 2016. It kind of marks like a little bit of trend change. So it's no longer dropping, it's more of a sideways move now, and there might be another pop coming soon. Um, as wiser people than me say, the cure for low prices is low prices. So because price of silver has been so low for so long, it's discouraged a lot of production. So there might be a shortage. So when the next pop happens, EXK is going to be tremendous. They're going to do well. So I like that they're strong, they're smart, they're responsible, they're a high cost producer, and they're ready to profit from the next spike up in gold. So that's why I like EXK, guys. That's why. All right, that's enough about that. I'll talk about something else tomorrow. Hope you enjoyed it. All right, peace out.